Hello friends and welcome. Today, we are going to talk about a topic that has captured the attention of millions around the world, the Pi network. You might have seen it on your friend's phone or heard about it online. What exactly is this project, and why is there so much excitement surrounding it? The Pi network is a unique digital currency project that aims to make cryptocurrency accessible to everyone. Unlike Bitcoin, which requires powerful computers and a lot of electricity to mine, Pi can be mined directly on your smartphone. This simple idea has attracted a massive community, with estimates suggesting over 55 million users, who are all patiently mining Pi coins every single day, hoping for a future where their efforts pay off. The core promise of the Pi network is decentralization and accessibility. The project was started by a team of Stanford graduates who wanted to build a cryptocurrency for everyday people. The idea is simple. You download an app, press a button once a day, and you start accumulating Pi coins. This process doesn't drain your battery or use your data because the mining is more of a system to distribute the coins fairly among early adopters. This massive user base, often called pioneers, forms the backbone of the network. They are not just mining, they are part of a growing ecosystem, testing apps, participating in building a community, all in anticipation of the day Pi becomes a real tradable currency. The journey of the Pi network has been a long one, filled with patience and anticipation. For years, the project has been in an enclosed mainnet phase. This means the Pi coins you mine can't be officially traded on major cryptocurrency exchanges like Binance Coinbase. You can use them within the Pi ecosystem, for example, to buy goods and services from other pioneers who agree to accept Pi as payment, but you can't cash them out for traditional money like US dollars, Indian rupees. This has created a lot of debate and speculation. Is Pi a revolutionary project building a solid foundation, or is it just a dream that will never materialize? This question has kept both critics and supporters engaged for a very long time. This brings us to today, September 4th, 2025. The long wait and endless speculation have been shaken by a significant announcement from the Pi core team. This isn't just another minor update. It's a piece of news that directly addresses the most talked about aspect of the project, its price. For millions of pioneers who have been diligently tapping that mining button day after day, this update could be a glimpse into the future they have been waiting for. It has sent ripples of excitement and curiosity through the community. What did the team announce? How will it affect the value of the Pi you have been collecting? Let's dive deep into this latest development and break it down step by step in simple terms. So, what is this major news that has the entire Pi community buzzing? Today, the Pi core team released an official communication, providing a clear framework for how the price of Pi will be established when the network moves to open mainnet. This is a monumental step. Until now, the price of Pi has been purely speculative. You might see unofficial exchanges listing a Pi IOU, a promise for a future Pi coin that is not real or endorsed by Pi network. They are highly volatile and often misleading. The core team has always warned users against trusting external listings. The true value of Pi will be determined by its utility and the strength of its ecosystem. The announcement, Mainnet Price Stabilization Framework, was posted on the Pi app home screen this morning. It details a multi-stage strategy to introduce Pi to the open market in a controlled, stable manner. A sudden, uncontrolled launch could cause massive price volatility. Prices could spike then crash, harming the community. To prevent this, they have developed a plan. The plan doesn't give a specific dollar value. It doesn't say 1 Pi equals $10. Instead, it outlines the mechanics and the data points to arrive at an initial stable price. This is a mature, responsible approach. The core update introduces a new internal metric, the Provisional Barter Value, PBV. Over the past year, the team collected data from thousands of peer-to-peer transactions all inside the enclosed mainnet. These are real trades where pioneers exchanged Pi for goods, electronics, handmade craft services like graphic design. The PBV is a calculated average from these barter transactions. The team says this is a more organic, community-driven indicator than outside market speculation. It's a price based on what people are actually willing to trade for Pi right now. This announcement shifts the conversation from what if to how. It provides a transparent roadmap for price discovery. PBV will be a foundational reference for initial exchange listings once open mainnet launches. They hinted the launch is getting closer. Building this framework is one of the final steps. So, you're a pioneer. You've been tapping that button for months or maybe even years. What does this update actually mean for you? First and foremost, it means validation. Your daily efforts of mining and contributing to the network are now linked to a tangible, data-backed value metric. The PBV of approximately 35 cents gives you a rough idea what your accumulated Pi could be worth. If you have mined 1000 Pi, this internal valuation suggests your holdings are worth around $350 within the Pi barter economy. This isn't cash in your bank account yet, but it's the most concrete estimate you've ever had, and it comes directly from the core team, not from a shady unofficial source. For existing users, this news should serve as a powerful motivator. Knowing that the project is in its final stages before an open market launch can encourage you to be more active in the ecosystem. This might mean completing your KYC. It could also encourage you to explore the Pi browser and engage with the apps and marketplaces being developed. The more people who use Pi for real transactions, the more data the PBV algorithm gets, and the stronger and more stable the valuation becomes. Your participation now has a direct impact on the future value of your own holdings. For new and potential users, this update provides a clearer picture of the project's trajectory. If you were skeptical about Pi, wondering if it was going anywhere, this framework provides a serious answer. It shows a mature, thought-out plan for entering the market, which is far more reassuring than a vague promise of future wealth. It signals that the Pi network is not just a social experiment anymore. It's a project on the verge of becoming a functional economic network. Another huge benefit is the focus on stability. The crypto market is infamous for its wild price swings. A new coin can launch at $1, shoot up to $50, crash back down to $2 within days, wiping out many small investors. The Pi core team's plan is designed to avoid this, with a price stabilization fund, a launch price based on organic barter value. A stable launch would attract mainstream users' businesses. If Pi becomes relatively stable, it could be used for everyday transactions, something even Bitcoin has struggled with. However, we must also look at the other side, the risks. The biggest risk is managing expectations. Announcing a PBV around $0.35 will make many calculate potential wealth, but that is an estimate. The final market price could be different. If open mainnet launches and price drops to $0.15, many pioneers expecting $0.35 or more could feel disappointed and lose faith. This could trigger panic selling, put immense pressure on the price stabilization fund, and potentially spiral into the crash the team wants to prevent. Imagine a pioneer named Priya. Priya is a student who has been mining Pi on her phone for the past 3 years. She has accumulated 2,000 Pi coins. Before today's update, if someone asked her what her Pi was worth, she would have to say, "I don't know. Maybe nothing. Maybe something one day." It was just a number in an app. After today's update, she can look at the provisional barter value or PBV of 35 cents. She can now do a simple calculation. 2,000 Pi times 35 cents per Pi equals $700. This doesn't mean she has $700 in her pocket, but it gives her a concrete estimate of the value the Pi community itself places on her holdings. Now, let's consider another example. A small business owner named Ahmed runs a local coffee shop. He's been hearing about Pi and is thinking about accepting it as payment. Before the update, he had no way to price his products in Pi. How much Pi should a cup of coffee worth $3 be? It was pure guesswork. With the new PBV, Ahmed has a clear reference point. He can calculate that a $3 coffee should cost around 8.5 Pi, since $3 divided by 35 cents per Pi gives you that number. He can now create a menu with prices in both his local currency and in Pi. This makes it much easier for businesses to start integrating Pi into their operations, which in turn grows the ecosystem and provides more utility for the currency. This is a crucial step towards making Pi a real medium of exchange. Let's also look at the risk side with an example. Meet David, who has mined 10,000 pi. Based on the PBV, he calculates his holdings to be worth $3,500. He starts making plans to use this money for a down payment on a car as soon as the open mainnet launches. However, when Pi finally lists on exchanges, the initial market demand is not as high as expected, and the price stabilizes at 20 cents instead of 35. David's holdings are now worth $2,000. He is disappointed and decides to sell all his Pi immediately, fearing the price will drop further. If thousands of people like David do the same thing, their collective action could cause the price to fall even more, demonstrating how crucial managing expectations is for the health of the network. Finally, let's see how the price stabilization fund might work. Imagine on the first day of trading, a massive number of pioneers like David start selling their Pi. The price begins to drop from 20 cents to 18 cents, then to 15. At this point, the algorithm managing the price stabilization fund kicks in. It starts using its resources to buy large amounts of Pi from the market. This new buying pressure meets the selling pressure, slowing down the price drop. It helps the price find a floor, perhaps around 14 cents, and stabilize there. This intervention prevents a total market crash and gives the community confidence that there is a mechanism in place to support the currency's value, protecting it from pure panic. With this major update behind us, the natural question is, what happens next? The road ahead for the Pi network and its price can be seen in a few distinct phases. The immediate next step, as outlined by the core team, is a period of observation and data refinement. For the next 3 to 6 months, the focus will be entirely on the provisional barter value, or PBV, monitoring the internal Pi economy, encouraging more peer-to-peer transactions, fine-tuning the PBV algorithm. We can expect more communications from the team about PBV trends. For pioneers, this phase is a call to action. Participate in the ecosystem. Use Pi apps contribute to building a stable pre-launch economy. Next major milestone, publication of the detailed white paper on the price stabilization fund. This document will be critical. How the fund is capitalized, what percentage of the team's coins are allocated, the specific rules that govern its market intervention, the transparency measures that will be in place. The crypto community will scrutinize this document heavily. A well-structured, transparent, and robust plan will build immense trust, not just among pioneers, but also among potential major investors and exchange partners. A vague or weak plan could create doubt and harm credibility before launch. After the stabilization framework is detailed and PBV shows stability, the final step will be the announcement of the open mainnet launch date. This will be the moment the entire community has been waiting for. The launch will likely be coordinated with several exchanges that agree to list Pi. The initial listing price will probably be heavily influenced by the final refined PBV. For example, if PBV stabilizes around 40 cents, exchanges might list Pi in that range. The first few weeks of open trading will be the ultimate test of the stabilization fund and community belief. A word for potential investors. This announcement will catch the eye of people outside the Pi community. Potential investors are now wondering if they should get involved. If you are one of them, it's essential to approach this with a balanced perspective. The Pi network presents a unique proposition. Unlike most crypto projects that launch a coin or try to build a community afterward, Pi has done it the other way around. It has already built one of the largest communities in crypto, over 55 million engaged users. That user base is Pi's single greatest asset. A built-in network of this scale is a powerful foundation for a new economy. For an investor, the main appeal is potential massive adoption. If even a fraction of Pi's users use it for regular transactions, the network's economic activity could be enormous. The core team focuses on a stable, utility-driven launch. They aren't trying to create a speculative bubble. They're trying to build a sustainable digital currency. Investing now is a bet on the team's execution and on the community transforming from miners into active economic participants. If they succeed, growth from a low price point could be substantial, but risks are significant and can't be ignored. First, until open mainnet is live, Pi is not tradable on the open market. You cannot buy Pi on exchanges today. The only legitimate way to get Pi now is mining through the app. Any platform offering to sell Pi today is likely a scam. Best approach now, don't look to buy Pi. Instead, download the app. Start mining, become part of the community.